So on YouTube, guys, do you see my screen? Yeah, hopefully you see. So good evening, everyone. Welcome back again in another weekly market outlook. Hope you guys are good, doing well, enjoying your weekend, and definitely getting ready for next week. So just let me know if things are fine on YouTube, on TradingView, and on Zoom. Just type yes, and then we're gonna go ahead. If you are having any issues, then let me know, either for sound or anything else. Just let me know. Okay, so let's move on. Let's look at the website first. If anyone looking to join us, want to join us for a group membership or looking for one-on-one training, just simply go to techtradingacademy.com, check the levels, and you can choose the levels if you are looking for group training, if you are looking for one-on-one. If you're looking for further information regarding that, just fill that form and send that form to me for further information. Yeah. So if you are looking for social sites where you can follow me for ideas, updates, just simply go to my TradingView profile, or you can get these details from my YouTube channel under the videos within in the description box. All right. So you can get those links from signature box. Just go to my TradingView profile and check the signature box. So all links are there. All right, so all links are there: website, YouTube, Twitter, Facebook, Slack, and Telegram. Now let's move on to the market, all right, and let's look at the setups for upcoming week. So the opportunity which is just setting up over there is the oil. Hopefully you have seen that chart, guys. Oil chart, WTI is testing the historical lows. Okay, this is a longer term chart, 155 years old history of the oil. So we can see that every time when we have recession or shocks to the market, we see aggressive sells on the oil. Okay, and historically, if we look at the oil price from 1861, hopefully you guys can see that chart, all right, clearly. So let's just zoom in. Hopefully you guys can see now. All right, so from 1861 to 2014, so price went below 20 since 1861, but never went below $9. All right, never remained below 10. You can see that for longer term. All right, so price remained close to the from 10 to 20, all right, since 1891 to 1970. All right, so you can see there 1970. So price remained there, and we have seen, stronger rise in 1981, and again we have seen a very stronger sell on oil uh, in 1999, and then again stronger rise on oil. Okay, back to the previous tops. All right, so back to 120, and again since 2011, oil price is under pressure, and you can see that coming close to the same place here, same close. It is currently running, close to 20. All right, under 20 or 20 ranges, we can say that. Okay, so the historical low according to this data, all right, is this. All right, so the historical low price, we can see that let's say 10. All right, we don't have the exact price over there, let's say 10. Okay, so 10 is the historical price. So price never remain below 10, all right, for longer term. All right, so that's the information you can get from this chart. Okay, historical price on oil. Now let's move on to the oil chart. All right, that's the oil chart, WTI. So you're looking for WTI to bounce up from the current price, all right? So it last week it went up to 1760 something, all right? 1750, 17 within these areas, okay? So the average price on WTI, according to that chart, the chart which I have just shown you, yeah, price went up to 13, between 12 to 14, all right, between 12 to 14. So if it is going to test these areas, so simple analysis, if WTI is going to test let's say 14, 13 or 12, so these are or even let's say 10, okay? So if it is these are the extreme levels, we are not anticipating oil to go there, but if it is going to go and going to visit these areas again, so it's going to be a best opportunity to buy, all right, for longer term, okay? So it's going to be a perfect investment for longer term to jump into the oil for longer term, all right? So any drop on oil from current price, you are looking to bounce off really aggressively for upside and reverse for longer term. So don't miss that opportunity. You don't see oil prices at these levels every day, okay? So what it can do, we are having currently imbalanced market. There is a lot of supply, demand is not there. People are shutting down their wells and shutting down their refineries to just mitigate that, all right? And as you guys know that we are having lockdown everywhere in the world, all right? Some countries are easing restrictions, lifting restrictions, yeah, which is a good sign that at some point we're going to have demand in the market, okay? So once we're going to have that demand going to drive the oil prices higher, okay? So it will take some time to balance the market again, all right? There is a lot of supply in the market, oversupply, we can say that, but there is no demand, okay? So which means that price can stay between 30 and 20 for a while before going to take aggressively, before going to take up aggressively. So you're going to have a couple of buy opportunities within these areas, all right? So even you can trade for short term, you can buy at the current prices, you can set your target 25, 30, and you can take off your profit. And again, when price is going to come back within the same areas again, like 20 or 17 or 18, whatever the price going to be, just previous lows or bottom. Just keep in your mind that the previous lows you are watching closely for oil to hold and reversal for longer term, and you are looking for buy, okay? That's how you can trade on the oil. So every time a price is forming new low or testing the previous lows, you are looking it to rise, and you can trade for short term, all right? These moves, okay? That's your move. You can trade on that move. You can take up your profit. Again, you can wait for the price to come back at the lows or test the previous bottom, and again you can get into the trade for longer term reversal. So there is a one thing, those who are not those who don't trade on oil, make sure you keep in your mind one thing, all right? And that is, if you are buying oil, yeah, as a CFD, then you have to roll over your contract before expiry, okay? And they're going to be cost, all right? Rollover cost. So you can buy oil as a CFD, or you can buy oil, as a Forex, all right? Like you buy other currencies and pay your swap on other currencies, all right? So the longer the trade you're going to hold, the higher the cost going to be, all right? It also going to depend on your leverage, how much leverage you are using, all right? So based on that, your swap gonna be calculated, all right? And the longer the trade you're gonna hold, and the longer the price gonna stay at the bottom, the higher the swap cost or the higher the trade cost gonna be over there, okay? Which gonna you know drop your profit significantly, all right? So which is going to drop your profit significantly. So if you're buying oil for longer term, just make sure you keep these things in your mind. Just before buying oil, just calculate your risk, calculate your swap, calculate everything, all right? Just simply calculate everything. Calculate your profit, calculate your risk, calculate your swap, and calculate how long you will have to hold that trade. Okay, based on that, you're gonna get the idea about your trade cost. Okay, and that gonna impact on your profit. So we are anticipating that price at least gonna take, you know 7 to 8 days. Okay, so similar time frame, 7 to 8 days, and at least gonna tag the 25. All right, so within next 1 to 2 weeks, price at least gonna tag the 25. All right, and within 2 to 3 weeks at least 30. Yeah, so it's a, risk is limited on oil. Okay, going long on oil within these areas, risk is very, very limited, and probabilities are very high. Okay, when I say probabilities are very much high, you can be profitable on this trade 100%. Now there are different techniques which you can use to trade on oil. Okay, you can buy oil at the current price. All right, let's say it is currently sitting at the 18. All right, so you can buy oil, you can use $2 stop loss. All right, you can put stop loss at 16 with $1 stop loss, $2 stop loss. Yes, you can buy oil with tight stop loss as well. So if you are not comfortable buying oil with tight stop loss, WTI, all right, you can buy it with a wider stop loss. All right, the wider the stop loss going to be, the less the probability is going to be to stop down. All right, and obviously your you know your risk reward ratio going to be affected. All right, so you can buy oil with tight stop loss. You can do a couple of attempts. If you are successful, hold it for upside. All right. If you are not successful and price is going to get stopped out, let's say you have bought it at $18 and your stop is at $16, yeah, and it is going to stop you at 16, yeah. So the next attempt you can make at 15.50, 15, all right, or maybe slightly lower than that with same stop loss, all right, with $2 stop loss. Yeah, let's say if price is going much lower, going close to 10, all right. So 10 is the area or the place where you can double your risk for longer term. Okay, the chart which I have just shown you at the start, 55 years history of the oil, it never remained below 10 for longer term. Okay, so if it is going to tag those areas, it is, I mean, if we are going to see another $8 drop on WTI, okay, so you can double or even triple your risk on $10 for longer term. Yeah, then don't use stop loss at 10. Okay, if price is going to tag the 10, then you can trade without stop loss. All right, rather than putting your money on other assets, on other currencies, or stocks, oil going to be the best opportunity for longer term. Yeah, so let's say it is going to tag the 10. You are putting your 2 to 3 times risk here, more than more risk here. Okay, let's say 10% risk or 15% or even 20% risk you are taking at the 10. Yeah, and then you don't need to use your stop loss. Just hold that trade and let the trade run. Okay, so high probability is going to be 100% over there. Yeah, at least. Yeah, if you're going to get the entry at 10, at least price going to tag the 20. Yeah, 1-to-1 risk reward ratio going to be easily achievable. So my point is that oil is creating a very high probability trade setup. Okay, so the lower the price goes, you are watching it to bounce off. So there are different types of technique which are which you can use to trade on oil. Tight stop loss, $1 or $2 stop loss. Yeah, if you caught the bottom, let it run. Okay, if you are not comfortable using that, you can use, let's say, $4, $5. All right, and if price goes lower than current price, the area that I have just shown you, 13, 14, or let's say even 10. All right, then you can even double your risk, and you can trade without stop loss. Just make sure you have enough capital in your account before you are going to trade on this, before you are going to add more. Okay, so if price goes above 20, let's say 20, 22, 23, yeah, so don't over risk on these areas. Okay, so risking above 20 is not sensible. All right, it's not a good price to take a higher risk on those areas. Okay, so the lower the price goes, you can increase your risk. Okay, because price is not going to stay there within those areas for longer term. So this is the opportunity you should keep in your mind. Okay, so watch these prices. These are the historical prices. We are not anticipating that the price is going to tag these areas, but if it is going to tag those areas, okay, so these are the prices, okay, historical prices. Just watch these prices. The lower the price goes, okay, you can double your risk within these areas. So price never remain below 10 for longer term. Okay, that's it, simple. Now let's look at the current chart. Okay, current price. So this is a very high probability setup. All right, so on lower time frame, you are looking for a strong impulsive move. We are already long on it, all right, and we are looking it to just, you know, open with a gap above 20. So you are looking for impulsive move, correction, and break the channel. The channels have just shown you over there. So high probability trade, guys. Good luck. Trade with care and enjoy yourself. Okay, so that's the US oil. So let's look at the dollar index. So dollar index to break down, all right? So we are having flag, another flag, which is just forming over there. So for next week, that flag to break down, all right? That flag to break down and dollar index to continue to go lower, tag the previous bottom and give us another buy move for upside, okay? So this trade you are looking for next week, so breakout. So if it is not breaking out, okay, so going for another corrective push up back to that top, okay? So flat formation or ABC move. This ABC move, I have shown you that last week, if you remember, okay? Then again, drop from that top. So dollar index, same like last week. So euro dollar, so all these charts are there on the trading view, right? So you can get these charts from there. So this is the dollar index chart. So updates are also there. So this is the updated chart. Okay, so we are looking it to break the flag, which is slightly higher, bigger, that flag to break down and continue to go lower. So euro dollar, okay, so euro dollar is coming back to the bottom. So you are looking euro dollar to break out for next week. So hold that bottom, breakout, okay, tag that top, flat formation, which I have shown last week, or continue to go higher, okay, this big move. Okay, so price still can drop for this move from this previous low. So ABC move. So first of all, you look in this to hold that bottom. Price currently holding that bottom. Okay, so this ABC move to complete and euro dollar to go higher. So if price is slightly going lower, let's say this ABC move is getting bigger, all right? This ABC move, this flag, okay, this is your impulse, this flag. Then again, stay bullish for longer term. Just follow that bigger time frame analysis. All right, just follow that bigger time frame analysis. Okay, so euro dollar and dollar chief, very much same like the dollar index chart. So next week, breakdown and continue to go lower aggressively. Okay, so it's already trying to break down. So breakdown, continue to go lower. A single aggressive fall all the way back to that bottom or flat formation. Okay, or flat formation. This flat formation and then go down. So dollar chief, dollar CAD also pushing lower. All right, so dollar CAD chart is there. Hopefully you guys remember that what we are anticipating on the dollar CAD. Okay, that's the bigger time frame analysis. So oil to bounce off, dollar CAD to keep pushing lower. Okay, so next week correction is just there. That correction to break down aggressively and continue, form another one and keep pushing lower up to 30. All right, or go higher. Okay, similar flat formation like that. Go there, test that top, and then again go lower. Okay, so chart is there. The updated chart is there on the trading view. So you can get this update from trading view as well. Okay, so this. All right, so flat formation, which I have just shown. All right, so breakout and continue to go lower. So Australian dollar, US dollar, let's look at the bigger time frame chart. All right, so we still can see another leg lower, okay, this leg lower on the Australian dollar back to that bottom, or maybe another new low there, okay, new recent low, and then longer term reversal. So we are still in this trend, okay, we are anticipating longer term reversal All right. So if equities are going to dip for another leg lower, then we may see another, drop on the Australian dollar, US dollar means and a strength on dollar for short to medium term. So how are you going to trade? So for next week, you are looking for another breakout. All right. And another breakout. Okay, this move, another breakout, price to tag that trend line or this previous top. Yeah, and then sharp sell. Okay, correct, and then go down for another move. Okay, if that sharp sell, which I'm asking you to look for from that top, is coming from current price, okay, then follow that. If that sharp sell is coming from current price, then get into the trade, watch for another correction, and price to go down back to that bottom, and then again longer term reversal from that bottom. All right. So that's a bigger time frame analysis. All right. But for next week, you are looking for next leg. All right. So this ABC move to slightly get bigger. Okay, ABC move or test this previous bottom and continue to go higher. Okay, back to that top or trend line. Okay, so breakout and next leg. So New Zealand dollar, US dollar also similar breakout for the next leg. Okay, we still can see another move lower on the New Zealand dollar, same like the Australian dollar. Okay, this one more leg lower or back to that price, back to that low. This is a recession low. Okay, and it is being said that we are in a recession, and that recession is going to be deeper than 2008. If so, then New Zealand dollar can visit these areas again. Okay, and this is going to be a decent move all the way back to the 45. Okay, so we still can see continuation to the downside. So how are you going to trade? Similar way, the way I have just shown you the Australian dollar, US dollar chart. Okay, first of all, break out and continue for another up leg. Okay, break out and continue to go back to that top or trend line, and then again sharp sell all the way back to the bottom. For next week, what is your trade? This flat formation you're looking or expanding triangle. Okay, this expanding triangle. All right, this expanding. So next leg you are looking. This is your trade for next week. All right, so back to that top. Continue to go higher. So pound dollar, very much same like the New Zealand dollar, US dollar, and Australian dollar. So next week you're looking for dollar to get weaker. So pound chart is already there. There is the pound chart. All right. So we are looking for this. Okay. So price already bounced up from the bottom from 114 and is running around 125. So this to continue to go higher all the way up to 143. So for next week, this correction to break out. Okay, so breakout, strong breakout. You can get into the trade or breakout, or you can get into the trade before the breakout within these areas by putting your stop behind that and that next leg. So that's your target for short to medium term, and longer term target is the 145 or 150 areas. Okay, so again, for sell back to that bottom, you need a stronger sell over there. Correction. Okay, once you're gonna see that correction, then you are looking to continue to go lower back to that bottom, and again longer term reversal. So bullish leg next week for upside. All right, and let's look at the Australian dollar, New Zealand dollar. Okay, and check the weekly chart. So it bounced off very nicely from the bottom. There you go, boom. Last week we are having a very strong aggressive move on it. So if you remember, I was telling you that this is the chart you should focus when price was there around within these areas. That was the chart you should watch for the buy. So we were tracking this chart in our room, and there is our, all right, so this is what we were looking, all right, and there you got the entries. Okay, we were looking for buy within these areas. I told you these, that last week, if you remember. Okay, so we got the entries exactly the area which I was telling you. Okay, so let's say you missed it. All right, so let's say you missed the Australian dollar and New Zealand dollar. Don't worry, So you are having a similar trade on the New Zealand dollar chart, on oil, sorry. Okay, oil is giving you this kind of opportunity again. Yeah, we knew that this pair not gonna stay there and only gonna go higher. So similar way, oil not gonna stay there for longer term. The prices which we are having right now on oil. Okay, so oil is your next opportunity to watch. Similar way, the way I have just shown you that Australian dollar, New Zealand dollar. Okay, so we are still holding. We are anticipating that price going to go much higher. Okay, so we are anticipating another correction and this trade for next week. So correction to slightly get bigger. Okay, correction is just happening, but that correction to get slightly bigger. So let's say in case if this pair is going to visit the lows again, the entry which I have just shown you. So they're going to be a buy again, all right, for longer term, these areas. Don't let the price go without you. So for next week, you are looking this correction to get slightly bigger like that and price to keep pushing higher. Okay, next leg. All right, so silver. So hopefully you are already into the silver long from the bottom and ride it. Okay, let that silver long position to go much higher. Okay, so it bounced off very nicely from the lows. And that's the chart, which you should keep in your mind for longer term, for next couple of months to years. All right, so price going to stay within that chart for next month, couple of months to next, couple of years, we can say that. All right, so this is the chart you should watch, and for update for next week, that's what you are having. Okay, which I was showing you last week. Okay, so simply break out and continue to go higher. All right, so you can watch these areas for short term to medium and this longer term trade. Okay, so still silver is still there. Silver opportunity is still there. Okay, so let's say if this is not breaking, okay, and pushing back to 14, yeah, so buy again. Okay, chart is there. Yeah, so these charts are there, updates are there. Okay, 1319. Hope you guys remember that. 1319 is the price where I was asking you to look for buy in silver. So hopefully you are into that long from 1390. So next week you are looking this flag to break out and continue to go higher for the next leg. All right, breakout, continue to go higher for next leg. Okay, S&P 500s. So S&P 500 is pushing higher. Chart is there. Nicely bounced off. All right, so 25 to 30% is up. Now, what people are talking in the market, people are talking that data is really bad and we are in a recession and equity is going to go lower. Okay, equity is going to drop. Yes, equities can drop, all right? Equities can, we are in a recession, but when you're in a recession, then you see bear market, okay? And last week, 22 million people have lost their job in the US. Okay, 22 million is a huge number. It's a big number. Yeah, so almost US has lost 10 years, employment which they have created. All right, so they have lost 10 years hard work. So that's telling people that we're gonna have bear market. Okay, but what we believe that we were in a bear market and it is recovering really quickly, and for longer term price is going to stay within these areas. Okay, so equities are not going to drop something like 60%, 70%, or like what 1930. Yeah, we have seen 60% drop in 1930. So we are not anticipating 60% drop. We have seen 35% drop on equities. A nice bounce off is happening over there and they are recovering. So we may see double bottom like that. Okay, this pattern. All right, now let's move on to the chart. If this is going to happen, it will create opportunity for you to buy if you miss the S&P 500. All right, so let's go to the old chart quickly. All right, so let's go to the old chart. Similar pattern. US S&P 500. So let's get that chart from there. It should be there on weekly time frame. Okay, so you see this is the pattern. Okay, that's the pattern. So we may see that pattern again. Okay, you see that? This is simple ABC move or expanding flat. All right, and we have seen that next leg. Okay, so we have seen that next leg. So similar pattern we may see there. All right, so this move. Okay, and then again, if so, then there going to be again longer term buy opportunity if you miss the move from 22. Okay, but before going to go after that, that's in case if it is going to drop. You can even trade on that one more move down. Okay, this is what I'm showing on a bigger time frame. Okay, this double bottom. All right, so if it is going to go down for another move like lower, okay, this double bottom, then again you can have a longer term buy opportunity on the S&P 500. So we are not currently anticipating this move. Okay, so clear. Now let's look at the lower time frame. Okay, so you are looking for next week another flag which is just there. Okay, that flag to break out and S&P 500 to continue. Okay, next week tag 3000. Okay, next week tag 3000 and continue to go higher. Just make sure you don't over risk at the current prices. Okay, okay, so short term you can buy for short term, you can trade and you can take off your profit. Okay, you bought, stop loss chart is there, guys. All right, so chart is there on the S&P 500 updated chart. What you should do, let's remove that, and okay, chart is there, what you should do. Okay, these are the short-term trades you should. Okay, this is your chart. Okay, short-term trades. Right, short-term trades. Target reached. You can take off your profit. Don't over risk on the S&P 500. So continue for the next leg. All right, S&P 500 to continue to go higher. And there you got the crude. All right. So this is also a similar opportunity crude like US oil or WTI. All right, so hopefully you have realized that it is running around 28, but WTI is running 18, $10 spread. All right, so this is going to be a much better opportunity as with compared to the WTI if it is going to test the 20 or slightly lower than 20. Okay, but both are buy. So you're looking for a breakout that next leg or one more drop and then breakout this flag from there. All right. So WTI bullish breakout or test the previous low and then continue to go higher. So similar analysis on the Nasdaq 100 index. All right. So you're looking for flag to break out and continue to go higher. So let's look at the chart. So which was the best index during this crisis is the Nasdaq 100 index. So just look at that, how aggressive it was. We have just recovered the crash which we have over there and just 5 to 8% away from the top. All right, so lower time frame continue to go higher, and from top, all right, we may see another leg lower. Okay, because of the recession fears which is there. So for next week you're looking this to continue to go higher on 1 hour time frame, breakout and continue to go higher, or slightly get a bigger correction over there 4 hour time frame. Okay, breakout or another retest of the trend line, another test of the trend line. Okay, so continue to go higher, continue to go higher. So German 30 is also similar like the S&P 500. All right, double bottom or continuation. So you're looking for another correction over there and go back to the top. All right, S&P 500. All right, so same analysis like the other equities. So you're looking for correction and breakout and continue to go higher. All right. And natural gas chart is there. Okay, bigger time frame chart is there. That's the natural gas historical levels. All right. So natural gas is at a historical place. So bottom. Okay, so you're looking for this big move for longer term. Okay, so price is trying to form bottom over there around 50, 150. So on this price, on lower time frame, right? So price bounced out from the previous bottom, all right? So you're looking for this to continue to go higher, yeah, break the top, and longer term reversal, or go down, form that flat formation, okay? Form that flat formation, and always buy on lows. Don't buy on these areas, okay? You can get a short-term sell again from this previous top or close to 2, okay? This short-term one more drop, you can trade on that move, and always buy on lows. Don't buy on close to 2. It's a bad price, okay? So natural gas longer-term reversal, that's what you are looking, okay? So test the bottom and reverse. So gold. For next week, breakout and continue for another leg higher. Let's go to the 1 hour time frame. So gold, breakout. All right, breakout, entry, stop behind that, and watch it to continue to go higher up to 1800, all right, or 2000. It can push up to 2000, all right? So next leg. So for short to medium term, you are looking for next leg. Your short term target is going to be that previous top. So gold is not ready to sell, okay? So don't sell gold, all right? So selling gold is not sensible these days. But if it is going to drop, okay, but make sure you see this correction before selling the gold, okay? Make sure you see that correction before you start selling that one more drop, yeah? And again, longer term buy from gold from the bottom, yeah? So breakout and buy for short to medium term for one more up leg. Okay, this correction very much similar like this pattern, all right? You see that expanding triangle? So you're having same expanding triangle there. Okay, breakout and continue to go higher, that trade. So EuroCAD also pushing lower. Okay, if we're going to look at the EuroCAD chart, that's what we are looking for longer term. All right, so it's pushing lower, not so aggressive. Why not so aggressive? Reason is very much simple, that oil is pushing lower, okay? Or when oil gonna bounce off, EuroCAD gonna drive lower aggressively. All right, so this correction is there, going lower. We have updated chart, but the updated chart is not there on TV. We have that in our room. So you look in this correction, okay? This correction which is just there. Let's slightly increase our time frame. Okay, let's move on to the 4 hour. So correction is just trying to appear over there. Okay, that correction to break down and continue to go lower. Okay, if correction is not going to continue, testing the previous bottom and going for another up move. Okay, so short term buy setup going to be over there after testing this low, but again drop, all right? Again drop from this previous top. So on 1 hour time frame, you look in this correction to break down, and market gonna open and oil to bounce off, all right? This correction. So we were on the euro pound, all right? Pound dollar down, euro pound. So euro pound correction and breakdown. Okay, correction is already there. That correction to break down aggressively, all right? This correction to break down and tag that bottom. Okay, so this opportunity is still there, but make sure when you are trading for this move, okay, you trade with care, okay, because there is divergence. Okay, strong divergence is there. Price can slightly push higher before going to drop, similar like the EuroCAD chart, okay, this expanding triangle formation. So trade with care on the euro pound for breakdown, okay, but breakdown, all right? So go down for next lower. So euro pound chart is already there. Hopefully You have seen that chart too. Okay, there you go, euro pound chart. Price is dropping very, very aggressively. Now continue to go much lower. Okay, this breakout, this correction is just there, the euro pound. Continue to go lower. So pound chief, very much same like the euro pound chart, breakout and continue to go higher. All right, so this correction to break out aggressively, strong. Okay, and continue to go higher all the way back to that top. All right, so yes, before selling, make sure you see sharp sell over there. You see that correction, and then you are going into that sell, right? So euro, dollar yen, another breakdown on the dollar yen. All right, next week, this correction, breakdown, and continue to go lower. All right, so, or watch this chart. Euro pound dollar yen chart is there. Okay, that's the longer term chart. You're looking at it, go all the way back to the bottom, or this chart. Okay, so we are having correction over there. Okay, now that correction, like that correction, all right? So that correction to break down aggressively for next week and continue to go lower. If you don't see breakdown, all right, just follow this chart. If you don't see breakdown, some people are copying these charts and selling those charts for, you know, to their followers. Okay, make sure you understand that, all right? Where is the original idea? Where is the original setup? Who's created that original idea? Hopefully you understand that, guys. You know that. Okay, so this ABC move. Right, so if that flag is not breaking, then let the price tag that and then continue to go lower. So dollar yen. So pound yen, chart is there. Let's go there in the pound yen chart. Okay, we bounced off from the bottom and we are having correction there. Okay, now that correction to break out and continue to go lower. I have shown you the example, okay, this example last time. Okay, how to trade on the dollar yen, pound yen, sorry. So dollar yen to go lower, pound yen to go higher, euro yen to go higher, and the rest of the currencies against the yen go higher, right? So if equities are going to drop aggressively, then yen gonna get strong. Just keep in your mind. Okay, so this correction to break out and continue to go higher. Okay, break out and continue to go higher on the pound yen. So euro yen, bottom, hold, and go back up. All right, this is the structure. You're watching this to bounce off from that bottom, all right? Okay, that trade. So pound CAD. So in pound CAD, simple this flag to break down. All right, not a best opportunity. I have shown you many other best opportunities. Okay, a short term, for short term, short to medium term, it's all right. Okay, so this to go down, break down that flag and continue to go lower. So Euro Chief, same chart like last week, hasn't changed a lot except lower time frame. Bigger time frame analysis is this. All right, so it's forming new low, slightly push more lower or bounce off from the current price. Okay, this trade back to that top or longer term reversal on a bigger time frame, which I have just shown you. So pound, Australian dollar, not a best chart these days. All right, and you are looking at to go for another up move or breakdown. All right, so a neutral analysis. Okay, but yes, short term buy, short to medium term buy. So pound New Zealand dollar, also a neutral analysis, not a best opportunity. Yeah, so short term go down from this previous top. All right, so short term go down back to that top, bottom or all the way back to the lower trend line, bearish. Okay, so CAD yen, longer term reversal. All right, so that's the longer term analysis, same analysis like last week. For next week, breakout of that flag. Okay, so aggressive breakout and reverse the trend. All right, so breakout and reverse the trend. So if price keeps pushing lower slowly, the way it is doing right now. Okay, so let the price tag the bottom and then again start looking for longer term reversal on the CAD yen from the previous lows. So Aussie yen break up for next leg, same analysis like the Australian dollar, US dollar. Okay, go for another up leg, and from that aggressively break down. Okay, if we're gonna look at the weekly chart, just make sure you buy these three pairs with care: CAD yen, Aussie yen, and KV yen. Okay, they are, you know, they are exposed, you know, to recession shocks. All right, whenever we have shocks to the market, then we see crash on these currencies to the downside. All right, so when you are buying, just make sure you trade with care, move on break even on time. Don't expose yourself to the market with high risk. All right, and always take a reasonable risk on these currencies. Okay, so breakout for another up leg and continue to go higher. All right, if not breaking and breaking down very aggressively, watch this. Okay, this correction before you start this, like that. Okay, before you sell for more downside, make sure you see correction over there. Yeah, because correction can slightly get bigger. All right, so don't just follow the chart on a breakdown. So we are looking for another up move. All right, so on the Kiwi yen, similar like the Aussie yen. Okay, this flat to continue to go higher, another up leg. Okay, on a bigger time frame, very much same analysis like the Aussie yen or CAD yen. Okay, that's the flag, this bigger flag, weekly flag to break into that direction for longer term, but it will take a lot of time. So you're looking for another move over there, okay, within that bigger channel. And again, price to struggle over there back to this low or all the way back to 2009. Okay, there's going to be a decent sell once that correction going to complete. Right, like last time. Okay, like these corrections, okay, like that, or like this bigger correction, or all these corrections. So a decent sell going to be over there. So first of all, look for it to continue to go higher next week, breakout. So Kiwi cat, let's go to the lower time frame. So you're looking for this to break out too for another up leg. All right, so trade with care on this currency. This is exposed, you know, to the oil. All right, Kiwi CAD. Okay, so CAD is a commodity currency. If oil bounced off really aggressively, then this pair gonna stay sideways within these areas. Okay, you're not gonna see a big move over there. So not a best opportunity. Okay, so next leg for upside. So euro, New Zealand dollar, continue to keep pushing lower. All right, flag already broken. Continue to keep pushing lower or go back up. Test that top flat formation and next leg lower all the way back to the lows. All right, so in a bigger time frame, continue to go lower. Okay, continue to go lower all the way back to this bottom. So flat formation, all right. So if you're going to look at the lower time frame, that's what I've just shown you on a bigger time frame, all right. So so this flat formation. Okay, so keep pushing lower, break these tiny corrections, keep pushing lower, even keep pushing lower all the way back to the lows. All right, if holding, go back up flat and then continue to go lower. Same analysis on the euro Australian dollar. Flag is there. All right, so that flag is there. Next week, that flag to break down and continue to keep pushing lower. If flag is not pushing lower, go back up for another up move. Form that flat formation, ABC move, and then drop. If we're going to look at the 4-hour time frame analysis, same like the euro New Zealand dollar. All right, so if we look at the bigger time frame analysis, okay, so reverse. All right, so this move. So Uzi Chief, Uzi Cat. Okay, so same analysis like last week, prices pushing higher, longer term on lower time frame. All right, so on this chart, you are watching for stronger sell. Okay, so for, yeah, stronger sell like that. Okay, so stronger sell, in, stop, correction, go down. Okay, it's done the recovery, it's done the retracement. So you're looking at to hold the previous top and go down. Dollar, peso, flag, trade with care on this currency. Okay, this is emerging market currency and in a strong bullish trend. Okay, so this correction to break down. All right, this correction to break down and go all the way back to the trend. If we look at the bigger time frame, okay, so correction, a bigger correction which I have just shown you in since last couple of weeks. All right, this all the way. So trade with care. When you're going to sell this currency, you're going to sell against this a stronger trend. All right, so trade with care. Specifically, don't add if you got the entry. Don't trade with without stop loss on these currencies, emerging market currencies. Okay, so cat chief breakout, continue. All right, so cat chief to break out that flag, the correction which I was asking you to watch last week, and continue to go higher. If not breaking aggressively and pushing lower for another move back to that bottom, you can trade, but this is not the best opportunity. Okay, exposed. Your risk is going to be exposed. Okay, and look for it to reverse for longer term from the previous bottom. Okay, dollar, Hong Kong dollar. If you trade on this currency, then time to watch it to hold the bottom and reverse. All right, so time to watch it to hold the pegged rate and reverse from that. All right, so hold it and longer term reversal. Okay, so just watch it on lower time frame. Price is holding. Okay, price is holding, and it should not break out 75, 7.75. So Uzi Chief, same like the Australian dollar, US dollar, and Australian dollar, Uzi, yen, sorry, Uzi yen. Okay, and this correction to break out and continue to go higher. All right, and after that, drop. All right, and if we don't see that, then make sure you see this correction before you start selling. Okay, this move we are not anticipating, so buy for next leg. Okay, make sure you sell the safe havens with care. Okay, the trade which I'm just showing you on lower time frame, this is the counter trend trade against the trend. Same analysis on the Kiwi Chief. Okay, so keep pushing higher or bigger correction there at this area. Okay, and then again another drop or longer term reversal. Okay, if we're going to go to the lower time frame and going to look at there, so ABC move to slightly get bigger and break out. Okay, this ABC move and break out. All right, now let's look at the US 2000. Okay, chart is there. That's the US 2000. That's the 2-week time frame analysis. All right, so we were anticipating this correction to form. All right, now we are having that correction. Okay, we're going to go to the 1-hour time frame, lower time frame analysis. So for next week, aggressive breakout. All right, and continue to go higher. All right, so better if you miss the move from there. Okay, better to let the price come down rather than buying at those breakouts. Okay, this is not a best price to buy the US Russell 2000. Okay, dip another time within that you know, expanding triangle or ABC move, you can say that like that. test the previous bottom or new low and bigger move for upside. That's your US Russell, UK 100 index. Very much same like the German 30, all right, or US equities. Okay, so you are having that expanding triangle, which we were anticipating last week. Now this tiny correction to break out, form another correction and keep pushing higher. Okay, if we're going to look at the lower time frame, 1 hour time frame, price already completed the correction. Now the next correction to break out, okay, this correction to break out and continue to go higher. All right, so same on Euro 50, Euro stock 50. Okay, so this correction to slightly get bigger, breakout and continue. Form another one, continue for keep pushing higher for longer term. Okay, so there is a huge potential for upside on this too. So stock 600 reversing, yeah, reversing from this bottom, correction to slightly get bigger, yeah. So breakout, we got the breakout, another breakout to form and continue to go higher all the way back to that top. So fundamentals are against these moves, the moves which I'm showing on the stock market, all right? Fundamentals, what fundamentals are saying? They're saying that 22 million people lost their job. No economy, no equities should push lower, yeah? Companies activities dropping significantly because people are not working, and how stock going to push higher? So stock is pushing higher because Fed wants stock to go higher. All right, so you should not go against them. Why you should not go against them? All right, because you're gonna earn money, all right, by working. You're gonna work 9 to 5, whatever your job is, and once you're going to have that money, then you're going to invest that money in the stock market. Then what Fed going to do? All right, they're not going to work. All right, they're going to print, they're going to put paper in machine, they're going to print, and they're going to use that money to push the stock market higher. Okay, so you cannot fight with them. You cannot fight with them because they print money and you earn money. Yeah, so whole world cannot go against the Fed. So market gonna go there where they want, all right? Because they print money. So either this system has to collapse, all right? Then you can expect that we are going to see, you know, very, very worse scenario in the market. Or you can say that this system is going to survive. We have, you know, we're going to see stability. So there are only two trends in the market. People say that there are cycles, this and that, blah, blah, blah. So there are only two cycles in the market. One is the recovery or growth, and the second is the recession. Okay, either market goes into recession or goes into recovery mode or growth. All right. So the rest of the assets, currencies, they just follow follow them. Yeah. So mostly we see stock market trending for upside and currency sideways. Okay, and if you look at the oil, when we see growth, oil goes higher. When we see recession, oil goes lower. So similar way, when we see recovery or growth, stocks goes higher. Okay, when we have recession, people are not working, jobless, rate is going higher, then we see a drop on the stock market. All right, and we see you know, those currencies which are heavily exposed to recession, they goes down. Okay, and the currencies which are safe havens, they goes higher. All right, so two cycle. There are not, you know, tons of cycle. There are only two cycles, either growth or recovery or recession. Okay, one is recession and the second one is the growth or recovery. Okay, so two cycle. Now we are expecting recovery. The charts I have just shown you showing recovery, all right, or growth, or come out from this mess. So they are already, you know, recovering. So continue to go higher. Okay, Nikkei index, ABC move and continue to go higher. Same like the other equities. So Frank 40 also break out that flag. Okay, so form this flag, slightly get bigger, all right, and then break out and continue the trend. Form another one, continue, form another one, and keep pushing higher. all the way back to that top. All right, so platinum also forming correction, which is similar like the silver. All right, so platinum to breakout to for the next bullish move. All right, so breakout and continue to go higher. All right, so we are having that correction last week, that slowly breaking out, pushing higher, and the next one to break out and continue to go higher too. All right, and copper is also pushing higher, slowly recovering from the lows. It has, by the way, recovered a lot from the bottom. Okay, so go all the way up to 3, all right, 3 or 330. So you're looking for another correction. Okay, and that correction to break up and keep pushing higher copper. All right, copper to correct there. Okay, similar like that, the previous correction, okay, and continue to go higher. If testing that bottom, buy again. So palladium also break it for the next leg. Okay, bullish on metals. Okay, so breakout for another up, like test the 3000 again. Test the top again, all right? So Bitcoin, very much same analysis like last week, hasn't changed a lot. When people are, pulling their money out from the rest of the market, then how they're going to come into the crypto, right? So Bitcoin is very much same analysis like last week. It's not moving, it's staying sideways, slow moving. All right, so if we're going to look at the old chart, all right, this chart, okay, that chart still playing, and we got the bottom, all right, and this is the updated chart, all right. So keep pushing higher slowly, and then again breakdown for another move, longer term buy opportunity from the bottom, okay, or this flag to test the lows again and give you a longer term buy opportunity again from the bottom. All right, so if we're going to look at the lower time frame, all right, so it is still in a correction. It's rising slowly, okay, it can keep rising slowly the way it is rising. Okay, keep pushing higher, slowly correct, keep going, and from there to drop. All right, or drop from the current price aggressively like the way it has done there, test this low and your longer term buy opportunities. Okay, so this is tradable, but trade on this then when you see that the sharp move is going to come. Put your stop and let it go lower. Okay, so a kind of neutral analysis I have just shown you, right? So dollar rand last week, one more up move. You are looking on it. Okay, so form another correction for next week and keep pushing higher. So it's a manipulated, it is at a manipulated areas. Okay, so we can see a very stronger sell again, on it the way I have shown you there, if you remember, right? So correct there and continue to go ahead, tag the 20, and on a bigger scale, correct for longer term. Okay, on bigger scale, there you see my chart. Okay, correct like that, okay, and continue for longer term. All right, so let's go to this past chart again. Okay, so we are having that move. Now correct for another time over there in a similar way. All right, so if you're a seller on these currencies, so make sure you trade with care, specifically on the emerging market currencies. They are falling against the dollar very aggressively because they are struggling to emerging markets are struggling simply. They don't have enough dollar, so that's why dollar is rising. They don't have enough dollar. Okay, so correct over there, right, and continue to go higher for another time. So dollar Turkish lira also pushing higher. Okay, so keep pushing higher slowly and form new high or go down within that flat formation for another move. All right, that's your chart. So if you're a buyer over there at these areas, make sure you trade with care. That's not a best price to buy because we can see manipulation. You see that? Manipulation from the bank, stronger sell, another move can happen over there. Okay, so just join sell when they are selling, when the central banks are selling, when they are manipulating. All right, so VIX, so, was a sell a couple of weeks ago, and it's going down nicely. All right, so you don't have a best opportunity on the VIX at the moment. So just look at VIX to keep pushing lower the way it is doing right now, and get back below 20. Get below 20, and stocks to keep pushing higher. All right. And if you are seller on the VIX, then I would suggest you to stay away rather than selling this VIX for $10-15. All right. So it's not a good to sell. Okay, it's not a good to sell the VIX, all right, at these areas. Yeah, in case if it is spiking aggressively for upside back to that top, then you can sell it again from those areas. Okay, even don't buy, right? Don't buy. This is not a best opportunity to sell at the current prices or buy at the current prices. Okay, only wait for it to tag the top close to 80, above 80, or close to 100, then you're selling. All right. So that's it for this week. Now let's look at the oil chart again once more. Some people are asking. Okay, so some people are asking, and just a second, all right. Just 1 second, let me open that image again, and there you go. All right, so interesting chart. So this chart starts from 1861. Okay, it's $20. Let's say $12. All right, $12 or $11 there. So you can see there price never remained below these areas. Okay, never remained below these areas for longer term. Yeah. So in 1890, if we're gonna look at this chart from top, all right. So Civil War, then price boom, then recession, 1890, 1892, then oil field begin to decline, Pennsylvania oil field begin to decline, then another Azerbaijan done something, all right, and then rapid adoption of automobile drastically. So there are reasons why we have seen those rise and why we have seen those falls on the oil prices. So why we have seen drop now on oil prices. So the reason is very much simple, because of the COVID-19, all right. Countries have locked down their cities. People are not moving around. Vehicles are not moving around, right? Okay, vehicles are not moving around. There is no demand. Okay, and we are having imbalanced market. There is a lot of supply, demand is not there. Okay, but this doesn't mean that demand is not going to come back. All right, so demand will come back. You can't, you know, people lock down for rest of their life. All right, so some countries are easing restrictions. All right, people are coming out, lives are, life is moving back to normal. This is a good sign. Okay, this is a good sign that there's going to be a stability at some point in the oil market. There's going to be demand. All right, so if oil drops for another $2 to $3, goes lower than 15, all right, then what's going to happen? The companies which are drilling oil, all right, which are, which are, you know selling physical oil, they are selling physical oil, around $5. Some are selling around $5, some are selling around $9, some are selling around, you know one company sold physical oil per barrel $2 last week, all right? So price is going to go negative, all right? If price is going to go negative, then what those companies going to do, they're not going to sell their oil free of cost. They're going to stop drilling, they're going to stop their wells, and they're going to wait for the prices to go higher. Okay, when they're going to wait for the prices to go higher, then what's going to happen? Automatically supply, they're going to shut down supply. Automatically they're going to stop to providing enough oil to the refineries, all right? And even some refineries are also shutting down. They have closed down because this is not a good price for them. Okay, the price which we are having right now in the market, the WTI benchmark is not a good price for them, all right? Or even $2 is is nothing. $2 per barrel is nothing. Yeah, so some of you guys, those who live in the USA, they are paying $2 and 80 or 70 cent for a liter, right? And where is $2 per barrel physical oil, and where is $10 or $15, whatever, wherever we're going to see bottom. So what are the probabilities? Oil only going to go higher. Okay, so patience, be patient, and limit your risk. And rather than putting your money on those currencies, those assets which not gonna move, or where probabilities are very less, you should put your money there where probabilities are very much high. All right, so oil is at the bottom, so watch oil to go long next week. So that's it, guys. Enough for this week. Hope you have enjoyed. All right, and there you are looking for oil to bounce off from that bottom. Okay, this is the oil chart. Bounce off, rise aggressively, and reverse for the upside. So thank you for coming into the weekly market outlook. We'll see you again in another weekly market outlook next week. Until then, bye bye.